37 minutes after 6, we are going over to Mike Eppel. So we're talking about the Canadian dollar, but how what's happening with the U.S. dollar, how this is all coming into play together, Mike.
Yeah, indeed. Good morning, Melanie. The Canadian dollar is at a 4-month high this morning. It's above 81 cents U.S. It has more to do with some comments coming from the Treasury Secretary of the United States. Steve Mnuchin is attending the World Economic Forum in Davos, Switzerland, ahead of U.S. President Trump, who will be speaking at that event later this week. Mnuchin is breaking with protocol, though. Typically, Treasury secretaries or finance ministers or central bankers do not talk about the valuation on currencies. He says, however, a dropping U.S. dollar, that's a good thing. It'll help them for trade prospects. The U.S. has long complained about a trade imbalance with other countries devaluing their currency. They cite China and other Asian markets specifically. So he's sent the U.S. dollar cratering here against the euro. It's at a 3-year low. Canadian dollar's at a 4-month high. The exchange rate down to $1.23.5. Also helping the Canadian dollar this morning, higher price for oil. It's north of $64 a barrel at a 3.5-year high and accelerating to the upside. So don't be surprised if you see a higher price at the gas pumps going forward. Toys R Us announcing it is going to close 180 U.S. locations, cutting thousands of jobs. This after Toys R Us late last year filed for bankruptcy reorganization in the States, owes about $5 billion. Its Canadian operations not affected. In fact, all 83 locations across Canada will remain open, and they're going to put more money into the company and expand and enhance the customer experience. We'll send it back to the studio.
Mike, I'm just reading something here from the Ontario Financial Accountability Office.
Yes.
That's our fiscal watchdog. We are drowning in debt. Literally, they've released some of the new household debt numbers. Alarming. Oh. Used to be about 119,000 back in 2010. Now up to 154,000 on average per household. We are spending 14% of our income, servicing that debt.
And the Financial Accountability Office, too, Kevin, is worried that because of these rising debt loads, as interest rates go up, guess what? That causes a spiral effect. You have to service that debt, and you won't have as much to spend. Does that slow down the Canadian and Ontario economy from a consumer standpoint?
Slowing down my economy. Thank you, sir.
You're welcome.